I'm going to show you exactly what you need to do every single day. And as long as you do this every single day, you will make money consistently over time. And this could very realistically change your life. So what you want to do is open up SPX. Okay, we're going to be doing some zero data expiration trades. SPX is the best thing to use. If you have an account under $25,000, you may be subject to the PDT rule, which means that you cannot make more than 3 day trades per every 5 business days on a rolling basis. Okay, so if that is the case, you can make 3 trades but not 4 on a 5-day rolling basis. And then at that point, what you can do is you can use, instead of using SPX, you can use /ES, which is the futures equivalent of SPX, and futures are not subject to the PDT rule. So that's how you can get around that. But in this instance, we're just going to be using SPX. Okay, you want to open up the list of expiration dates, option expiration dates. You want to pick the 0 day. Obviously, in this instance, it's a Sunday, so the market's closed. But assuming, obviously, let's pretend it was a Monday. The 1 day in this case would be the 0 day. So pick the expiration date that's going to be expiring that same day. Now you want to open it up, and I'm going to show you 2 strategies. Okay, now the first strategy is you want to start off by selling an at the money straddle. Okay, so in this instance, assuming that obviously price last traded at 55.80, so we're going to go to 55.80. We're going to sell the call, sell the put. This is the straddle here, and then we're going to buy some wings. And the highest average trading or the highest average P&L per trade is going to be to buy some wings $10 wide on either side. So on the call side, we're going to go $10 wide, 5,590. On the put side, 5,570. And that's basically the setup. Okay, now you're probably thinking this looks very weird. Why would you do this? You have a pop, which is probability of profit of 14%. None of this makes sense. But if you have a look here, your max profit is 955 and your buying power requirement is $45. Okay, so and your win rate, because you're going to be taking profits at 25%. Okay, you're not going to be waiting till expiration, you're taking profits at 25%. So your win rate is going to be about 43%. Okay, so you're going to be making 25% of 955, and in the worst case scenario, you're going to lose $45. Okay, now your win rate is going to be about 43%. Okay, now you want to put this position on at the open. So within sort of the first half an hour, I like to wait about 10 minutes or so, just for any adverse moves at the open to kind of get out of the way, and then I put the trade on. So you're gonna have a 43% win rate. You're gonna have a max loss of $45, a max profit of 955, but you're going to get out of 25% of this with a 43% win rate. And that's the first trade setup. This has the highest average P&L per trade if you do it this way. However, you are going to have a win rate of 43%, so you are going to lose most of the time, but it's when you win bigger. Okay, now if you do want something more consistent, what we're going to do is we're going to come again at the open within the first half an hour. You want to, instead of selling a straddle, you want to sell basically a strangle, and you want to be at the on the edges of the expected move here. If you don't have expected move, you can just use 15 delta, 20 delta, whatever you want. Also, in the top right, your broker should always display the expected move in parentheses. In this case, it's plus or minus 66. So you could just use that and just calculate plus or minus 66 from whatever it's currently trading at, instead of using the visual expected move here, if you're using a different broker. But basically, you want to sell at the expected move on the edges. So 5645 here, you want to sell that. 5515, you want to sell that. And then you want to buy some wings. The best wings to buy, in my opinion, are $20 out. So we're going to go 5, 10, 15, 20. We're going to buy the 5665. Same thing again on the put side, 5, 10, 15, 20, 5495, and you're going to buy that. Okay, now as you can see here, you got a pop of 81%. You're going to collect 785 up front, and you're going to put up 1.2 in buying power. So as you can see, This is kind of the inverse of the first position. You are again going to be taking profit at 25%, and your win rate is going to be over 90% on this. So you are going to collect less on every win. However, your win rate is going to be much higher. Obviously, you do have a larger max loss in this instance as opposed to before. So just keep that in mind. You can also, reduce the size of your spread to say $10 instead of 20, and that is going to reduce your premium, but also reduce your max loss. You can go even, narrower. Just depends on sort of how big your account is. But when it comes to scaling, as you grow, as you make money, the first thing you want to do before adding, before selling more lots, you want to widen out the width of your spreads on either side to at least $20 before sort of increasing the number of contracts that you're selling or the number of lots that you're selling. Okay, and that's the setup. You could pick whichever one of the two strategies you want. The first one, which is an iron fly, you're going to make more every time you win, but you're going to win less. The second one is an iron condor. You're going to make less every time you win, but you're going to win more. Okay, out of the two, if you just want to go for purely the highest average P&L per trade, your iron fly, which was the first strategy, that's going to, your average P&L per trade on that is going to be around $63. With this, it's going to be in the 20s. So just to give you a kind of idea, and you also need to keep your buying power in check. We have got a free position sizing template. The link is in the description. You enter in the size of your portfolio, and then you enter in whatever the current VIX level is, and then everything is going to be calculated for you. In this example, we showed defined risk positions. So in this case, maximum amount of buying power to allocate to a single defined risk position is 2.5k, and in this instance, our buying power fits in with that fine. So you'd be able to put this position on in that example portfolio. But between the two strategies that I showed you, and I showed you how to manipulate, your buying power requirements, it doesn't matter how big your account is, you should be able to take advantage of these strategies. And if you do want to learn in more detail, again, the link will be in the description. Click on EDS Premium, get yourself signed up. You will have access to this example portfolio that I showed you, which is a live portfolio, by the way, real money on the line. You get to copy all of our trades. You can study our trades, reverse engineer, whatever. Everything is in real time. We show you everything from putting the trades on, taking the trades off, managing the trades, risk management, everything. You don't need to know anything before joining. There's a full course inside. We'll teach you everything you need to know. It's a private community, so if you get stuck, you can speak with myself, other like-minded individuals. There's also 100% money back guarantee. So once you've been through the course, follow some of our trades. If after 6 months you're not profitable, we'll work with you for free until you are, or you can request a full refund. So it is completely risk-free. It's $9.99 a month to join. The price will be increasing. Once you're in, the price is locked in, so you are rewarded for getting in early. The aim of EDS Premium is we want to give you the skill, we want to teach you the skill. We don't want to keep you dependent on us, and we aim to get you to a point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.